Greetings everyone. Uh, my name is Benedict and I'm the president of Lambana Trade Capital. I just quickly wanted to brief you guys on what we could possibly expect for the AUD CAT on a weekly chart for the next coming weeks, uh, depending on how it will actually react in this week. Today is the 20th of November, so we will give you an update on what exactly will be transpiring in the markets regarding this currency pair. Now, the reason why I've drawn here is simply to show you what aspects we are looking at before we can actually take into account any before we could actually commit our money to any single trade. Now, please be advised that trading forex is highly risky and you could lose all of your investment. So do not trade with money that you need. So now I just want to show you guys how I actually came about this conclusion regarding the pair. So I'm going to take you through a few aspects I take into account before I make any conclusion as to whether the market will continue to go long or will continue to go short or reverse, either way. So now for those of you who are familiar with support and resistance, these few things are quite important due to the fact that wait, I just want to remove these things here. Alright, I'm just going to remove everything so that I can take it step by step with you guys. So now, the first thing that one must be able to identify, and the most important of all, is the trend. Which direction is the trend going? Now, this means it's either you are going to trade in the direction of the trend, or you are going to be looking for counter trends. But with counter trends simply means that it's movements, small movements within the main movement. For example, if I had to draw a trend line here just to show you what is a trend line, is simply 2 points going in the same direction, on of which, if I had to draw a trend here, we can identify that the trend is actually going down. So that means you are still in a downtrend, but within these downtrends or an uptrend, there is always points whereby the market will bounce off and make like turning points. They call them breaks within the market, sort of like these points here, where this was a turning point, a retracement within the main trend. And here's another one, a little bounce up top, and then it started continuing to going downwards. Now, the reason why I put in buy positions at this area is simply because of our method of trading, which is basically buying at support and selling at resistance, meaning buying at the bottom and selling at the top. So looking at it from a weekly chart, if you had to just zoom out a little bit, we can see that this level here is what we call a very hard resistance level, whereby previously the market actually reversed at this point here. And another thing you have to identify is, does it have any indication of price rejecting lower levels? You can see that by looking at the body of the candles. Now, this small portion here is what we call the candlestick, and this is the wick of the candlestick. It simply shows you that the price did manage to reach below but could not stay below that point, so meaning there's a large quantity of buyers in this area that were pushing prices to go higher. And with this candle here, it left a quite uh, a huge wick here, and then as you can see, the following week it started to rally up very strongly. So now we are actually anticipating the same price action uh, right here. As you can see, in the previous week, um, the candle closed above um, pretty much at the same area as the previous candle here, and it also left an indication of prices being rejected at the lower level, so meaning there's a large quantity of buyers coming in at this price. Now I'm just going to put in my analysis and show you guys what it takes to actually be able to identify these few points. Now what you want to do is first of all, just change your um, just change your just go to settings and just change your chart here from a candlestick to a line chart, and you can go back there. And then as you can see, this simply shows you the reversal points in which you can actually place your proper support and resistance levels. So I'm going to put in a horizontal line at the bottom there where the market previously reversed, which is there. Let me just quickly change the width of this thing, just make it a 2 so that we can see it properly. Alright, as you can see, the reason why I actually placed this is because of this area here, this turning point here. Never mind the wicks. At this point, right now we're actually just trying to identify those turning points. For example, here you can see that the market touched up here and eventually came back to the same area, and it started dropping once more into this direction. So now we're gonna be placing horizontal lines at each turning point. As you can see, this is another turning point because the market turned there, it made a little bounce here and before it broke through, and then it made a retest. Once it broke through below again, it made a retest at that very same level and started to drop more. It came back up, and at the same level it made a slight retracement there, and then it broke through again and it bounced off here, going back up, and then there was another test there. So that means that's another level for us to take in consideration, and we'll put our horizontal line there and on top here. Just edit it real quick. Right, another one. Right, and then we also have another one right here. You can put it right there. All right, so after you have finished plotting your horizontal lines, what you want to do is you want to mark these areas, because price does not turn at a certain, just simply one price. It's an area in which it starts accumulating and starts collecting the necessary strength to actually continue or to reverse from those points. So now it's usually in an area instead of one single price. So we're going to mark that area with a rectangle so that we can identify the area there. Now try not to make it too big. In fact, try to make it as a minimum of 20 pips and a maximum of 30 pips. Sorry, this because I'm doing this on a phone, so this might take a little. I'm just gonna mark this one at the bottom here because it's currently the most important one, as the market is currently trading at that area there. So once I'm done that, I'm gonna change back to my candlestick chart. I'll go back to settings, change it to candlesticks, and can go back to the chart. So now if you're looking at it this way, there you go. So now you can basically see those turning points that the market went into before it started turning. So now we can anticipate that because of the similarity in the price action of this previous week candle, which is very similar to this week's candle, we can anticipate for it to actually start reversing and moving upwards, because now as you can see from the top of this downtrend here, this has been from April this year. So the market has been moving downwards, a downward trend from April. So it's been close to almost a whole year where the market has been moving in a downtrend. So we can actually anticipate a rather nice upwards movement right now, because it has actually reached a very significant support level. So we're gonna just have to be a little bit patient with it and let it do what it wants to do. But in case that it does not continue or reverse and start moving upwards, we always want to just put your stop loss below the candle, the previous candle. If it has a wick, just put your stop loss just below the wick. You can put it as much as 10 pips below the wick or 20, it depends on you. As to this one, it's about 20 pips difference there. So that is where I say, you know what, if it does not reverse, then I'm not willing to stay in this trade anymore. So now this is one of the first things that I consider regarding regarding taking any position. So another thing I would like to also add is what we call Bollinger Bands. The reason for Bollinger Bands is simply indicates to me that what is the probability of the reversal actually happening. Now how we actually use this is, okay, sorry about that, let me just quickly add a Bollinger Band here and I'll explain to you now. The parameters for a Bollinger Band always has to stay as the default settings, which is the period will be 20 and the deviation will be 2.0. all right, just say done. Now what we are particularly looking for is, as you can see here, the market came close to actually piercing the Bollinger Band. Particularly what you're looking for is when the market actually pierces through the Bollinger Band but closes inside the Bollinger Band. So that could give you like a indication of a possible reversal. As you can see with the other candle here, it did not particularly go all the way below this wick. So and then the market started reversing. So now we're actually looking for pierces through the Bollinger Band, and the second testing of the Bollinger Band where the market actually goes into the Bollinger Band and starts moving outwards. For example, let's see if I can find another example. Sorry, because what we do know is that with the Bollinger Band, it actually shows us where the market is more likely to reverse. Now once it starts piercing outside the Bollinger Band, you can surely anticipate some sort of reversal, because the market seldomly actually moves outside the Bollinger Band for too long. It naturally just comes back inside. So now, as you can see with this one, we had about 2, 4, 5 candles outside the Bollinger Band, and the red candle here, when the market actually started reversing, was quite a strong one here. So you could have made your money there. So you will get actually more confirmations on a daily chart regarding any trading positions that you might want to take if you are actually doing your analysis on a weekly chart. So but particularly if you see things like this, then you can anticipate some sort of um, reversal. For example, here, most people actually would have thought that this is a pin bar, so they would have actually put a lot of sell trades here, which would have been actually profitable. The reason being is because if you had taken a sell trade here, you would have probably put your stop loss above your pin bar there, and then your take profit would have been probably at this area here. But from this point, as you can see that the market did actually move into profit, so you could have actually banked a portion of your position there and just put your stop loss to break even and let the trade run. And obviously here your position will have actually been closed due to this big candle here in a trend continuation. But then the point is, we are actually trying to identify where the market actually bounces off these Bollinger Bands and starts reversing. Here the market did hit the Bollinger Band here, and it started dropping, and it continued to drop up until this other support here, and it came back for the second time in an attempt to actually break through this resistance level here, and failed again and started to move downwards. So now you are looking to combine your Bollinger Bands with some reversal candlestick patterns, which um, uh, coincide with support and resistance. So those three are the major three things that you need to consider before you can actually take a position. Also depending on whether the position that you want to take, if it's a counter trend trade, then you have to be actually very careful with that and make sure that the level that you're trying to trade from, the support or resistance level that you're trying to trade from, is actually quite a significant one, meaning it's a higher time frame support and resistance. By that I mean that it's best to actually plot your support and resistance from a weekly chart into a daily, all the way up to a 4 hour. So it will be, those three time frames are the more significant time frames of which institutional traders trade from. So in order for you to actually make profits like a professional trader, you have to think like a professional trader and operate like a professional trader. So you also want to trade from the same levels that professional traders trade from, and which is from weekly, in fact monthly, but monthly is not all the time, but weekly, daily, and the 4 hour. Those are your, should be your time frames to trade from. All right, so these are the few things that one actually has to take in consideration before taking a trade. So now for us, because of the price action and the pierce in the Bollinger Band and the significant support level there, we actually can anticipate a bounce off that level. But then I shall update you guys as to how the trade actually plays out. But for now, thank you for watching, and I hope you learned a great deal from this presentation.